Hi all, welcome to FrankBanker podcast, a knowledge sharing platform for banking, finance and related technology. This episode is going to be priority sector and community lending. Amit, could you please throw some lights?
Very important topic, Bala, when you look at banking frameworks, correct, and priority sector lending or community reinvestment or community contribution from the banking sector is a very important point of view. In fact, in India, banks are required to lend in the priority sector 40% of their banking credit, right? So that's the importance that the sector has in any emerging economy as well as in the advanced economies.
Okay, so Amit, what about other countries? Is it similar or completely different? How?
It's so the focus is there in all the countries, as I said, whether it is advanced economies or whether it is emerging economies. I think focus is everywhere, although the intensity, the coverage and the methodologies vary,
Okay,
right? So for example, in USA you have Community Reinvestment Act,
okay,
which requires banks to invest in the communities around them, right? And in UK, then you have community investment and social finance framework. In Brazil, you have a national program for family farming. In Bangladesh, you have closer to the neighborhood, you have a requirement of lending to Agri. Plus, of course, microfinance is pretty active there. Then in many other countries also, microfinance is a good tool to do this priority sector lending in Indonesia, Malaysia, in Latin America. So every country has it, although the flavors are slightly different. The way it is executed is slightly different, but there is a common thread there. And common thread is how do you bring in bottoms up economic upliftment, right? Economic activity.
okay. What are the broad areas for such interventions and what is rational for each?
So areas vary, but I think a common one would be, I think agriculture remains a big focus across most of the geographies. Then you have small businesses. How do you support them? That becomes a very important part of your community activity or community investment or priority sector. Then you can have investments which are done in social infrastructure. So for example, your sanitation, your hospitals. Then education is our focus area in many geographies. Then sustainable finance or your renewable energy related investments can be a focus area. Apart from these areas, there would be certain strategic priorities for the governments or for the regulators. For example, again coming back to India, exports has been our focus. So loans to exporters is a very important part of priority sector lending again.
Okay, so primarily financial inclusion and supporting vulnerable section is the key driver.
Yeah, that's the starting point of it.
Okay,
That you want to bring in, as I said, the bottoms up economic activity and upliftment, but it goes beyond that. So as you go deeper into it, you will realize that the benefits or the advantages or the impact is much wider, much deeper as well.
okay. Let us discuss the key ones. Let us start with Agri first.
Yeah, so when you talk about Agri, I think the obvious reason is very clear. So Agri is important for any country from the aspect that large populations in many of the emerging countries are engaged in agriculture. So in India, for example, as per the National Sample Survey, 90% of the farmers who are there are small and marginal farmers, meaning they have land holdings which are less than 2 hectares. Now, if you're a very small farmer and agriculture per se is exposed to many vulnerabilities, right? There are many variables which are outside the control of the farmer. So, for example, you are dependent on monsoon, you are dependent on fertilizer prices, right? You are dependent on logistics availability. Let's say you are in perishables and there is a limitation of cold storage or temperature controlled vehicles. Then you have a constraint there. So there are many variables which are beyond the control of the farmer, and therefore you require some bit of a support to run those activities, right? So smaller vulnerable sections plus high vulnerability to the variables that we are talking about. Therefore, focus is required on providing finance to such communities.
But if I look at little objectively, Agri is very well supported through subsidies in India, and it's a tax-free category. Why create push-based lending?
Yeah, so you are right there that there is a social aspect to supporting lending, and not only through priority sector, you have other interventions also. So that is there because you are talking about a vulnerable population which is into business, which is again prone to vagaries of nature and so on and so forth. So you need to create a system.
So social welfare primarily.
Yeah, at the surface of it. But if you go deeper, you'll realize that there are strategic benefit. And the first strategic benefit you get is food security. The way geopolitics is today, where every country is leveraging its dominant position, food and fuel become very necessary for your economic independence. So you need to have that. Now, if you talk about why support Agri for food security, because you have people with smaller land holdings, so they are marginal, their access to capital is any which way limited. Plus, the activity they are in is open to or is exposed to the vagaries of nature.
Okay.
So what you are trying to do is incentivizing them to continue doing that activity so that there is enough production and there is a food security for the country. Now, this food security also brings in another element to another advantage, which is your ability to manage inflation. Assume if you are dependent only on imports, what happens? But if you have domestic production, you can put checks and balances around it, right, to control inflation, right? So therefore, the impact is not only about social upliftment, that is a factor, but at a strategic level also there is quite a bit of benefit to the economy.
Okay, interesting. Amit, I wanted to go a little deeper on this.
Yeah.
See, you are giving small loans to the relatively unpredictable business, and isn't Agri lending is got already a very high risk? So why are you forcing banks to go for this?
Good question. Good question. Why force banks to
Yeah.
banks to do it? Okay. So here, Bala, you see that there is an advantage even to the banks when they do priority sector lending properly. Okay. Now, what is the advantage, right? If this kind of a constraint is not there, and they have to lend, where would banks go and lend? Their priority would primarily be well-rated corporates, and the second segment that they would want to go into would be salaried class retail loans.
Correct.
Now, from a risk point of view, these may be better, but if you look it deeply, there are challenges even in this kind of a strategy. So, corporate loans, if you are giving, even to high-rated companies, you are primarily creating portfolio concentration.
Okay.
Right? You are creating concentration only at the top of the pyramid.
Okay.
If you are giving retail loans, it has its own challenges because retail loans primarily go into consumption. They do not go necessarily into asset creation. Now, if you want to grow economically, you would need asset creation to happen in the economy, right? And entities which take borrowing for asset creation over a period of time require more and more funding.
Okay.
So if you look at it from a bank's point of view, if you're giving a loan for asset creation, that asset is utilized for growth, right? And ultimately would lead to more credit demand in the market. So priority sector lending is what? Priority sector lending is primarily lending in a granular way for asset creation. And that is a very strong impact that this kind of an intervention creates. Now, the universe available for priority sector lending is also bottom of the pyramid, which is the widest possible base available.
Okay.
So the opportunity of lending also is larger, collectively speaking, in the priority sector lending space.
Okay. So Amit, from the economy side, I am very clear now. It's very fair. But when I look at the bank side, don't you think that it's very risky?
For the bank balance sheets,
Obviously.
You're right. On the surface, again, if you look at it, you will feel as if priority sector lending is to a very high risk segment.
Yeah.
It will have an impact on the balance sheet and possibly on the profitability. Right. So let me address it at multiple levels over here. Now, let's say you do not have this constraint and you are lending to corporates. Now, if everybody is targeting that top of the pyramid, as I mentioned earlier, that means there is an overcrowding happening. Assume all the banks are trying to lend over there. What happens to the profitability in such a high competitive space?
Okay.
Correct? So it starts impacting your profitability. Plus the opportunity to lend itself will be limited, and therefore your portfolio growth will slow down.
Okay.
Okay, so I'm just reiterating that important impact which priority sector lending brings in. Okay, the second aspect of it is that by doing this lending of priority sector, you start with small ticket loans, and over a period of time, the growth happens. There is also a cross-sell opportunity which arises after a certain level of funding. So even if you're giving to new to credit customers, over a period of time, their own personal consumption requirement will also come in. So you get an opportunity of cross-sell of the other products also.
Okay.
So it's a propagating kind of a cycle, virtuous cycle, which priority sector lending, if executed properly, and that's a big if executed properly, can create for the banks. There is one more part that the risk is, you're talking about, let's say 40% in India is what we're talking about. But if you go deeper, the entire priority sector lending is not high risk. You have exporters, which are primarily medium-sized entities, and the lending is secured. So it is not that high risk. You have small businesses where you are lending, and again a collateralized lending. So it's not high risk, right? Then you have lending for large tickets also within the priority sector lending space. So for example, for renewable energy, it could be large entity. Maybe in smaller, weaker and more vulnerable profiles like marginal farmers or weaker sections, the requirement from the regulator is only around 10%. So it's not that 40% is to be created there. It is only about distributing the credit at the right strategic priorities, not necessarily high risk profiles.
Okay. So Amit, will it not create a sector bias in the banks?
So one is, of course, it is well distributed even within 40%. So you're not creating a sector bias per se. But let's say that entire priority sector is one big chunk and one kind of profile. Even there, systemically, you see regulators would create different ways in which this lending is done. Because as I said, the bottom of the pyramid is a very wide segment. So it is not possible only for banking system to service it. Okay. So you therefore have, for example, finance institutions where the models are very different. They are more localized, more regionalized. Their methods of assessment are different. So that provides a big support to the same sections of the society. Right. And in fact, it acts as a feeder to the banks, because these microfinance customers over a period of time, as they grow, become eligible for large bank borrowings. Okay. Then you have non-banking finance companies. So that provide another buffer for you to provide lending to these sections. So systemically, the risk is well distributed amongst various entities. Then you have cooperative banks. They target a certain. Then you have regional rural banks. In USA, you have community banks, and different kind of structures may be there in different economies to support and diversify the concentration of even the priority sector portfolios across the entities. For example, in India, you have small finance banks. Small finance banks are required to have 75% of their net banking credit into the priority sector. They have a cap in terms of the ticket size of the loans. 50% of their portfolio should be primarily to small and medium businesses. So that's a separate segment of banks itself, which is created within the system to well distribute and focus on the large bottom of the pyramid opportunity.
Okay. To understand the process well, what happens when the banks don't meet the targets?
So if they don't meet the targets, regulators will either have a carrot or a stick, or maybe a mix of both.
Okay.
Right. So for example, in certain economies, they will be graded based on the contribution that they have done to the community or to the priority sector lending, and that there could be an incentivization if you're doing very well in that area. Specifically in India, if you don't achieve your priority sector targets, you're penalized, and there are investment or there are certain deposits that you would have to do in certain long-term categories. But there is a window available which is called PSL certificates, priority sector lending certificates, wherein a bank which is doing very well and has already met the target can sell these PSL certificates to other banks where they have the shortfalls. Right. So that is a window available for them to compensate for any shortfalls that they might have in terms of targeting. And it is important also. Why? Because, so for example, some banks may be very small, or some banks may have a very limited branch network, like foreign banks in India. Now, expecting them to do deep rural lending maybe would be a challenge. So there is a window available for them to bias the portfolio most towards export lending, exporters. So such kind of windows are available. Such kind of calibration is already done in the policy, realizing these practicalities.
Okay, interesting. Amit, I just would like to understand a little more detail about PSLC. One bank can buy other bank's portfolio?
No, so PSLC is not about portfolio purchases. It is not securitization. PSLC is only an instrument so that as a system, we are able to achieve collectively a PSL target, which is set by the regulator over here. So it is primarily for that purpose that PSLCs are bought and sold, correct? But it does not mean the portfolios are transferred. It is not equal to securitization.
Okay. Circling back to the financial inclusion aspect, is giving PSL target sufficient to achieve the targets?
No, it is not sufficient if banks approach it as a compulsion, right? But if banks approach it with the idea that it is a big business opportunity, then it is beneficial, as I said, at the strategic level, at the economy level, even for the banks, right? Because banks are creating, by doing PSL, they are expanding the credit market over a medium and the long term. Okay, so banks' approach to PSL lending is what determines how successful PSL is, right? And you have to understand that you cannot have off-the-shelf products trying to force fit those products into every segment of your priority sector lending. Even within Agri, for example, right? You cannot have a Kisan credit card being given to all customers or all farmers in the same way across the country. Because your farmer in Punjab is very different from farmer in North Karnataka.
Obviously.
Your farmer in Odisha, right? And the dynamics are different. Each district-wise, there are different dynamics. So you need to take into account how you're going to do it, right? So there are some processes already set around it, but that is a good example for us to understand that you need to segment the market well. What I call it as deep smart segmentation.
Okay.
Now the cue for the deep smart segmentation actually is coming in from the way government is launching a lot of the lending schemes.
Correct.
Right. So for example, you see Mudra Yojana is targeted in a certain quantity of loan for a certain segment. More interestingly, more granular loans are being launched, right, over a period of time. So for example, you talk about the Swanidhi scheme.
Okay.
The Swanidhi scheme is primarily for street vendors and very small ticket loan. Now, more recently, there is a Vishwakarma scheme, which is for skilled small businesses, right? So again, a very small ticket. So this is what I mean by smart segmentation. You're talking about a very specific targeted segmentation where you're talking about a limited amount of exposure based on the risk profile, based on the consideration and the assessment criteria that you have to evolve for that particular segment, and then launch a product or a service. Now, with this mindset, it becomes a much more scientific and refined way of lending. But if you say, no, I have to go and give high risk lending and with one off-the-shelf product, then it becomes troublesome. So if this deep smart segmentation is what banks approaching, I think PSL is a wonderful opportunity.
Okay, Amit, I think more or less we have covered the priority sector and community lending. Yeah. So thanks for sharing the insights. So viewers, I'm sure you would have got the deeper insights on priority sector lending. We have put the links at the bottom for more information. Do like, share and subscribe. Thank you all.